How can tax loss harvesting offset my ordinary income? Imagine turning a financial setback into a tax advantage. That's what tax loss harvesting can do for you. It's a smart move to help reduce your tax bill as the year ends. Here's how it works. If you own investments in taxable accounts that have gone down in value, you can sell them to realize a loss. This loss can be used to offset any capital gains you've made during the year. If your total capital losses are more than your gains, you can use up to $3,000 of the remaining loss to lower your ordinary income. Lowering your ordinary income means paying less in taxes on wages, salaries, or interest income. For example, if you have $100,000 in wages and you use a $3,000 loss to offset that, your taxable income drops to $97,000. This can make a noticeable difference on your tax return. If your total capital losses are more than $3,000, don't worry. The extra losses can be carried forward to future years. This means you can keep using those losses to offset income or gains in the years ahead. It's a way to plan ahead and save on taxes over time. The process involves a few steps. First, find investments in your taxable accounts that have declined in value. Then, sell those investments to realize the loss. Be careful to avoid the IRS wash sale rule, which says you can't buy the same or a very similar investment within 30 days before or after selling it. If you do, the loss gets disallowed. Instead, reinvest the proceeds into similar but not identical investments. For example, if you sell a stock, you might buy a similar exchange-traded fund or mutual fund to keep your market exposure. This way, you stay invested without violating the rules. For Asian American taxpayers who might have higher incomes or specific investment goals, tax loss harvesting can be especially helpful. It allows you to manage your tax liabilities while continuing to grow your investments. Doing this at the end of the year helps you see your gains and losses clearly, making your tax planning more precise. Remember, you can offset up to $3,000 of ordinary income each year with net capital losses. Any extra losses can be carried forward, giving you ongoing tax benefits. This strategy not only lowers your tax bill but also keeps more money working for you in the market. It's a simple, effective way to make your investments work harder for your financial future.